Hi everyone, welcome to SSAS London, March 2024. What event it's going to be. I hope you're going to enjoy all the content and all the great people we're going to hopefully be interviewing. I've got one of the main people in this event, Usman. He's going to help us with the intro today. Usman, the budget. That's getting straight into business. Not a great budget, was it?
Not at all.
And one of the big areas, furnished holiday lets and the implications of the rule changing. You were mentioning something about a white paper on it.
So everyone that's watched the budget know that they've abolished the entire furnished holiday let regime, tax regime on that, which is a big blow. Ultimately, there will be a white paper that will be released within the next 30 days, giving the detail, and the devil is definitely going to be in that detail to establish what exactly is going to be exempt or ruled out completely. There's always a consultation period, there will be amendments to the bill, and we're hoping that there will be some kind of a workaround, but I think the main thing here that we're going to be looking at is going to be serviced accommodation, it's going to be a trade. Who knows? At this point in time, I think we have to hold fire and see what that detail is, and before we advise on what the next steps are, anyone who's got a finished holiday let that they want to get done, we're going to hold fire for a bit and we're going to see what the detail is going to be, because what we want to do is make sure that everyone's claims and everyone's assessments and everyone's allowances are going to be able to be running forward. I can't see them impeding those claims too much. However,
Unpack, great value. April 2025, that's due to come in. Good old Jeremy dropped that one in, and I've always challenged how much his tax knowledge is, because he's not thought about all this devil in detail of the difference between furnished holiday let, service accommodation. We are going to get Usman on the podcast, and it's going to happen probably after the month of fasting, Ramadan, and hopefully by then we'll have the white paper and we've got a good discussion point, because
there will have to be some form of a distinction.
It has
to be. You can't just lump it all in with residential income, because it's not residential income.
Exactly, and also I think the other challenge we're going to have is what Usman has rightly unpacked is, what about the people that have claimed now? You're not going to have, if they claim it now, they're going to have to be able to carry it forward. There's going to have to be some provision, because otherwise there's something called balancing charges. He hasn't thought about the whole process. There has to be a transition period if they're doing that. So watch this space and hope you enjoy the event. Thank you, Usman. What I'm talking about at South London, we got celebrities turning up. Ranjan,
Good to see you.
great to see you. And Ranjan's going to give his thoughts. First time at South London, Ranjan.
Yes. First
How have you
time.
found it?
It's good event. Lots of interesting people as always.
And I guess the key thing is, and you talk a bit about SSASs as well, I know you got one, and it's about understanding the power of them. A lot of people don't. You've benefited quite a lot by understanding the power of SSASs, right?
I mean, absolutely. It's very easy to set one up, but how to use it and the flexibility it gives you is what you have to educate yourself to just know how to drive it and take it out of first gear.
Absolutely, it's like having a fast sports car, almost like his Porsche that he's got, right? You got to make sure you know how to drive it.
Yeah.
It's not like on automatic. It doesn't work that way. It's an entrepreneurial.
There are managers or fund managers to do it all for you. If you just sit there and do nothing with it, nothing will happen. It's up to you to drive it.
What's the key strategy that you feel SSASs have helped you in your journey?
Well, there's a lot of things you can do with it. I think what I like about it is the ownership of commercial property. So typically we'll purchase a vacant unit or a property that's under rented, and you optimize the rental income from it, and then you sell that commercial unit to your SSAS at the optimized value.
Well,
That work very well.
What Ranjan's talking about is quite a decent strategy. He's talking about buying a shop and potentially uppers. One example of this, buying in an SPV, potentially doing a loan back or cash, or getting a private investor finance, doing the work, and then selling the commercial, which is normally at the bottom, to the pension, and keeping the freehold and residential. That strategy still works and is huge right now. But obviously, you need to know PD, which this gentleman, if you watched our podcast, he knows his permitted development. I love watching the stuff as well.
And of course, development finance is very powerful for you to get to that.
Yeah, so you're
lending to other people.
So you're talking about giving finance to third parties?
Both.
From your...
I tend to like, development finance from a normal development provider can be a little bit complicated with all the QS involvement and stuff like that. But if you just lend do a loan from your SaaS to your limited company and use that to fund the development. That can be very, very powerful. So you're basically your own bank.
I talk about that all the time, and something I'll be doing, loan backs. Loan backs, you can have up to 50% of whatever's in the pension, right? It does include not just the loan, but the interest bits as well. But that can be quite powerful, and it can help the journey quite a lot because you're becoming your own bank.
Yeah.
Because the interest is tax deductible in the company, it goes into the pension, and
Yeah.
there is no income or corporation tax. I love that. And you've also lent to third parties.
Yeah. Some of the stuff I do on Property Elevator is through my SaaS.
So what Ranjan's talking about is when you lend to third parties, there's no limit of 50% and the rules are different. But obviously I always say do due diligence, make sure you've got no security in place. I know Ranjan always has that. And therefore you can then benefit from the interest on that as well.
Yeah.
Huge.
Yeah.
How have you found meeting some of the property developers? Because obviously he runs Baker Street and we will do that later in the month. It's an exciting episode this time. Is how have you met the different types of people? Because here they're more geared on using the SaaS. Property developers probably geared more than just investors.
It's a bit of both, really. There's some SaaS people, there's some investors. It's an interesting crowd. It's always nice to attend a networking event where you're not having to think about organising it. You can do a bit more networking.
So Ranjan runs one of the premier events and we're quite fortunate. Go Baker Street, that's what he's talking about. At this event, he's just been able to relax, enjoy, you know, and you had all these people like, oh, is there Ranjan there? So they come in and asking him questions. And where's the big common questions been about? Probably commercial conversions, is that, or what have you people been asking you about?
All sorts, really. A lot of people have recognised me from various places and just asked me more about that, really.
Wow. And obviously, it's the value. You constantly, when you got someone who's got knowledge, right, people are just geared towards that person, aren't they? They want to understand and try to get that insights. And Ranjan always shares these insights, as you noticed in the podcast. Let's get on to Baker Street.
Podcast is great.
I love that. That's one of our best podcasts. I was going to say, I want to ask you, Baker Street in March 2024 is going to be a big one.
Oh, massive. 26th of March. We're doing it in conjunction with the Property Investor Awards. Wow. We're looking at what makes a award-winning property deal in 2024. And we're joined by 6 judges who are from the judging panel of the Property Investor Awards. So there are going to be 300 people there. It's going to be action-packed, a lot of networking, and a lot of value, a lot of takeaways.
Wow. And also I've heard a little rumour, one of my network telling me that you're going to be at an event in June, being a judge of awards. Is that right?
Which one is that again?
Blue Bricks one.
Oh yes.
We're going to be covering that one. I'm looking forward to it, going through the process. I love it. It's going to be a huge, nice venue.
Yep.
And also meet another section of people. There's going to be some really established judges there as well.
Definitely.
A lot happening. I know we're brilliant, and if Ranjan gets a moment, I know he's a busy man, he might like the post, right? And obviously you can connect with him, follow him. I definitely always say follow his YouTube if you want to learn about PD, property strategy.
There's a lot going on YouTube, and Baker Street is bakerstreetpropertymeet.com.
Wow. Thank you, Ranjan. As always. Perfect. Hi everyone, we're at SSAS London, March 2024, and we've got one of the regulars, as you know from Sky TV, the man that knows about property development, Dave Ford. Thank you. I love getting his insight. Dave, as we're talking, the audience always wants to know what is happening in the property development world. Where are the projects? Let's start with the big ones, 10 million plus. Where are you seeing them in the world? What's happening?
They're all in the Middle East. That's where the big money is. That's where that's where the growth is. It's where all the smart people are going. That's where the highest profit with the lowest taxes on a plane. Dubai, Saudi, Bahrain, places like that, Oman. Yeah,
That's where it is.
unbelievable amounts of work. Yeah.
Because they've got a lot of cash, haven't they, and they're invested.
Well, they got a mindset. They want growth. They want entrepreneurs. You know.
I agree with you. I've seen a lot of stuff going like this. What about Europe? Is that more 1 to 10 million happening in Europe, or are you seeing anything in mainland or Ireland and places like this?
I do know of. Well, Ireland's experience in construction and housing boom now.
Wow.
They've got a chronic housing shortage, but at the same time, there's a construction boom.
Wow.
You know. So, and that, funny enough, is like my parents are Irish, so it's a funny thing. When there's work in Ireland, you won't see an Irishman over here. When you start seeing the building sites flooded with Irish, you know it's bad over there. So at the moment, out there, there's good money to be made.
I think the key thing is it's been incentivised. It sounds like because their corporation tax in Ireland, as I'm doing this, is lower than the UK. And that's why you've got big companies that are situated like, I think Google is situated there. I think Starbucks is situated there, still in Ireland.
Yeah,
and there's a reason why, isn't there?
Yeah, Glaxo and all that, they give them 10-year tax breaks to set up and
Wow.
everything. Yeah, zero, they give them the site for nothing. They build the factory or their head offices, whatever, and it's a 10-year tax break.
It is interesting. I want to hopefully give some good news to the UK property developers. How are you seeing the projects in the UK? Because you get a lot of insight, a lot of people in construction, property development come to you to get your advice. So what are you seeing out there right now?
The most successful people I'm seeing at the moment are picking stuff up in auctions. There's a lot of stuff going into auctions at the moment, and I'm seeing people picking up brilliant deals, you know.
Wow.
And of course, don't forget, prime London, always. It never stops here. Tax, interest, cost of living, world recession, don't make any difference when you're in Mayfair, Belgravia. And what I am seeing is, if we go back 2 years ago, there was Boris Johnson out on telly going, oh, all this dirty Russian money, it's absolutely disgusting, it must go, we must clamp down on it. So all that happened, all that Russian money that was fueling the luxury property business in London, it went from here back to Russia to Lithuania to Turkey. 2 years later, it's all back here, you know.
Dave's given his understanding and what his insights are. God knows, we'll let the government decide what that is or what isn't. But it seems like there's still opportunities, and obviously the capital, London. I've seen a lot of stuff in Birmingham, Manchester as well.
Yeah.
Because Manchester, especially, because of that Abu Dhabi lot who own Man City, who I'm a big Man U fan, but they've invested loads of money to Manchester. And that's driving it, isn't it? You might have seen that as well.
It's true, yeah. Well, Manchester's always been a very thriving city after London, isn't it? I do know a lot of people are doing projects up in Birmingham. I have to say though, they all seem to be low social housing, student stuff, that sort of thing. That's just what I'm seeing.
Yeah, no, do you know what? It looks at the demand, doesn't it? Do you know, so listen, Dave has given huge value on the UK property market. You're going to love Dave. Dave, thank you so much. We really appreciate comments. That is value, that's knowledge. Hi everyone, we've got the main presenter. You might have seen my LinkedIn post or social media today. Ed, thank you for joining us. What a presentation. If you've not heard it, you want to hear it. And I think you've got it recorded as well, I think.
Yeah, we did. Yeah.
I love it. And I guess the key thing is, Ed was giving a bit of a masterclass on financing. And Ed, your financing, as I mentioned in my LinkedIn post, make sure you have a look at it, is about bespoke.
It's about the fact that everyone's different. Everyone has a different scenario. You've got high net worth clients, you've got clients who don't have a standard income, you've got property developers, investors. There's no one product, there's no one solution that can work for everyone. You've got to understand the client, and with over 300 lenders that we have access to, you can use one or a combination of different lending solutions to achieve the ultimate goal that client's looking for. So, don't put people in a corner, understand their scenario, and there will be a solution. It's such a huge market to access, to go for, that there's always a solution.
Do you know what, Ed makes some strong points? Financing, as many of you know, right, makes the world go round. Because if you don't have the finance, whichever way you're going to get it, you can't do the project normally. So if that's normally how property works. So obviously you've been working with a lot of investor developers. You're doing a great case study, how you help people doing complex scenarios and coming up with solutions. And one thing Ed does really well is he works cross-functionally with different people. Because when you go to finance, you need probably an accountant, tax advisor, lawyer, and you have to get combined, don't you?
I think when you look at a development or an opportunity, the finance has to fit around the tax structure. Your structuring is so important, and so working with people like yourself who can really understand how to structure a deal, how to structure the ownership, is really crucial. And then we put the finance around that. So always go with structure first, because that will make everything tax efficient, and then put the finance around it.
Yeah, I think the key thing is the value. And what people, you'll notice, depending on how the entrepreneur's mindset is, whether they actually are understanding the value. Because if they don't understand the value, they're going to end up paying over the odds.
Yeah.
Right?
And
That's
so-
the key.
Well, that's why it's so key not to focus on just the rate and the fee. It's to look at the whole cost of the structure, the development, what your profit's going to be as a whole, rather than saying, this is better because it's got a lower rate. It's not always the case.
Absolutely. And I guess, what is the area that you're seeing right now in the market in March 2024 at SSAS London? I'm putting him on the spot. What are you seeing in the marketplaces coming up a lot? What are you seeing from a financial perspective?
I think we've been through a cycle of inflation, cost of build material, property prices, interest rates. So what's fundamental right now is just to get your numbers right. Is the residual value of the site correct? Are you negotiating the best price? Have you got your build costing correct? Have you got enough contingency? Is that GDV at the end correct? Have you got enough comparables to make that work? So due diligence, just making sure that you've got all your numbers accurate, that you're best placed to minimize risk and get your realistic profit on the way out.
I guess it's the return on GDV. What do you think is currently you're seeing as property developers? What's the magic number return on GDV? What percentage are they looking at should be when they're appraising the projects, whether to do it or not?
I would say be conservative. Make sure you use conservative numbers across the board with your build cost, your finance cost, your exit, everything. And if you're getting 20%, that's good after finance costs. Now, I have seen some pretty good and punchy profit numbers coming through, but I always try and disregard those. So take a good haircut on the GDV, up the finance cost. Development's always going to take a little bit longer. The sales aren't going to come through in the anticipated time. And if you're still hitting 20% after your finance costs, I think you're good to go.
That's an interesting way of doing it, because people have different ways. So if he's talking about 20% after before finance costs, if you're doing them after finance costs, before finance costs, you're looking much more, aren't you?
Yeah,
it has to be.
It'll be about 27, 26, 27.
Even up to 30.
Because I work in finance, because I'm arranging the finance, I always look at an after finance cost, because that's what's important to me, and I can do that. I can budget for the client, and I can make sure that the end result is, what they're actually going to be getting. I don't tend to look at before finance as much, because I can know the level of risk, and I can account for what sort of rates and fees they're going to get just by having that initial conversation.
I think it's the classic EBITDA, isn't it? That's what a lot of people do, at least before interest tax, if depreciation amortization is relevant or not. And it's trying to get a baseline of what is the cash generating of this before the costs that are related to the deal. And I think that's a smart way, and that's generally how a lot of lenders look at it as well, don't they?
It depends on the asset class. Are you talking about development finance or a trading care home? Everything's different.
Absolutely, it depends on what you're leveraging and what you're going to do. For me personally, I look at the lot. And the reason why is I look at tax as well as interest costs, right? Because I say to people, when they're looking at return, what is it after those? And how you influence tax and interest? Because they're normally quite a big part of the puzzle. And what happens to a lot of people, they don't take that into account, and then they're shocked because it takes a lot to earn £1. Right? If you're going to lose a lot of the £1 to interest and tax, you haven't thought through it, or you haven't taken that into account. Because that's your ultimate bottom line, isn't it? That is your money.
And you've got to look at what are you trying to achieve? Is it cash flow positive profits now, including the debt? Or are you using finance as a tool? Are you using finance as a transitionary product to get from where you are to where you're going to be? So, for example, you can do on a plot of land with no planning or with poor planning permission, you can get a 5-year bridging loan, for example, to enable sufficient time to go through a new, more creative, more ambitious planning application to achieve a better land value and a better project at the end of it.
I think that's a great answer, because what people look at is what stage they're in. If it's income that they're trying to generate, because normally you have to live, so the income is quite important, but then it's the wealth and then the legacy. And that's the journey. And they normally come in that order. Everyone's different. So, but I think when you're doing a development, a lot of times they're looking at income, they're not necessarily looking at the wealth and legacy aspect. When investors get to that point, they're holding assets, they start to think about wealth, right? They still haven't necessarily thought about legacy. And funny enough, tax affects all three. So, huge value. Ed, thank you so much.
Thank you.
That's what we get value at SSAS London. Don't you have to love it? What an evening it's been. We've got our final guest who wants to give us some insight into his entrepreneur journey. Sam, nice meeting you.
Great to meet you too, Z.
And I've seen Sam around on the tour, as I say, of all the main events. You've been getting out there, so how are you finding SSAS London today?
I mean, SSAS London is brilliant, if you ask me. I think this is one of the events where I've come to, and I've definitely come out saying, I've been able to say that the caliber of people that I'm able to speak to, including people like Z, of course,
He's humbling me.
I mean, mate, come on. So much information, so much knowledge and wisdom there has been absolutely phenomenal, and I've really enjoyed kind of doing the circuits, getting to meet people, seeing what they're getting up to, hearing what they're getting up to, and essentially just learning. It's a whole lot of learning at these events, right?
I think one of the things Sam has done is been a very astute learning. He's asking people questions, getting different experiences from different people, understanding them, and he's been humble himself. He's a bit of a property entrepreneur. We were talking about your journey. What have you been investing from the property world, if you're happy to share with
Absolutely.
the social media
So
family?
I've been invested in property for about 5 years now,
Wow.
and that's included a couple of buy-to-lets, some rent-to-rent stuff. I'm actually expanding on that now in a new direction. A couple of auction purchases as well, kind of BRRR type of ventures.
Love it. So just to interrupt,
Yeah.
sorry to unpack that.
right.
BRRRR, for the people who may not know, most to do is buying, refurbishment, refinance, and then rent.
Rent
or
out,
rent
yeah.
and refinance, depending how you want to do it.
Yeah, you can think of it as a buying and holding strategy, essentially. The main thing I'm actually venturing into this year is commercial to residential conversions.
Love it.
Different exit strategies on that, depending on what the need is in the area. It really
So
depends.
on that, I want to unpack, because that's one of my favourite strategies. You had Ranjan on earlier, and he loves that, the king of commercial property, I call it. So when you're looking at your commercial, are you going to hold after converting, or are you going to sell?
That is the plan. As with any development, right, you need to keep in mind a few different exits, right? So essentially, my main exit strategy would be to hold and to either rent out as SAs or, I mean, you can't do HMOs on a PD. I am prioritising PD, the PD route, the permitted development route. So either that or supported living. Again, it just whatever works in the area and whatever. Wherever I can get the end users for the project. Some of them even partly commercial as well. So yeah, just whatever can work there.
I think Sam mentioned quite a lot of things, just a bit of insight. He said, give me a bit of tips, I'll try my best to give you some tips on this. If you're doing a commercial resi conversion, you need to know your strategy at the beginning, because when you change from a developer, just a reminder, when a developer, someone buys it to sell, add value and sell it, or if you're an investor, you buy it, maybe add value and hold it.
Yeah.
You've got to get that right to the beginning, because it has a tax implication. That's number one.
Yeah.
Secondly is the structuring. We were talking earlier, Sam, he's got a parent company, which is fantastic, because you have one subsidiary that will buy it, because you're buying a block, a freehold.
That's right.
Yeah, and when you split it up, that's how you get value to add it up.
Yes.
And therefore you need to know how to split it in a tax efficient way.
That's why I need him.
Yeah, and also what we're talking about, as we are in SSAS, and you love SSAS, as I was saying this, if you use the SSAS pension, you can get even more efficient, because if you keep the commercial at the bottom, right, the
Yes,
shop,
that's
which
right.
is advantageous, if you split it, instead of moving that over, you can sell it to your pension,
Yeah.
right? And this gives a magical thing, because you're becoming more taxing, because you're pulling the cash out of the pension and putting an asset in. And
Absolutely.
the asset will not pay income tax, corporation tax, capital gains tax, and one more. It's called inheritance tax, because I know you've got a young family.
Absolutely.
So
yeah.
these are the ways that you do the income strategy, the wealth strategy, as well as the family legacy strategy. This is what I talk about, because you need to be thinking about all of this, because it hits all the different boxes, but it's a journey, and knowing start to finish what you're doing it, why you're doing it, knowing your why, right?
Exactly, yeah. I mean, my why is pretty clear. I won't bore you with that for now, but everything that Z has just mentioned is exactly what I come to these events for. I mean, if I just, decided to just be cavalier about my approach, as I have been in the past actually, and just run with it, and then try and figure it out later, or figure a few things out later. If I'd continue doing it, I'm not sure where I would have been about 5-10 years from now. But with these valuable insights and seeing so many people and what they're getting up to and what they're doing, it's really absolutely changed the course of my life altogether.
I think it's a transition, because
Absolutely,
the whole point of Go Network, and I'll go on about it to property events and things like this, is maturing as a property investor developer. Because when you start, it doesn't matter who you are, you start with no knowledge at one point. It doesn't matter who you are. And I speak to so many entrepreneurs who are super successful or starting their journey or halfway through. So you just keep on increasing the knowledge and then baking that into your decisions,
Absolutely.
i.e. your investment or development decisions.
Yeah.
I think you're doing a great thing. I hope you've enjoyed Baker Street. Next time when we go there in Baker Street, and you've enjoyed SSAS London today.
Yes, I've enjoyed. Yeah, I mean, Baker Street
I met
was great.
Sam at Baker Street, so really
That's
good.
right,
And
yeah.
also you had Ranjan on earlier, and he's going to be talking about Baker Street next week, which is going to be big. Sam,
I'm looking
enjoyed
forward to it.
Perfect.
Thank you very much.
Thank you. Wow, what a SSAS London March 2024. From speaking to the King of Commercial, Ranjan, and a lot of different guests. We had the main presenter, Ed Checkley, who gave a huge amount of wisdom as well, and all our other lovely people that we've interviewed, and hopefully they've added value to your journey. Please do like and comment below. I hope you've enjoyed the SSAS London March event, and I hope I see you in the future going forward at the events. Thank you so much.